Hi there, I'm Champion Trader Kevin Davey, and today I'm going to show you an algo that works in a bunch of different markets, a bunch of different bar sizes in 2022. All right, let's do it. Okay, so let's get started. First, I'm going to describe this algo system so you can understand what's going on here. It's just a simple RSI based system that's a relative strength indicator or relative strength index. It was developed by Wells Wilder. It's not the same as relative strength that you might see in the stock market when it's talked about, but this is just an RSI indicator with a moving average. It's a stop and reverse system, so there's no stop loss on this system. There's no profit target, which I realize scares a lot of people. So maybe one of the things you want to do, if you really want it, you could always go and add that. But what I tested was just a simple stop and reverse system. And it's based on entry number 12 in my Confessions of a Champion Trader book. Let's take a look at the rules. So first, you calculate the RSI and the moving average. Most trading software will do those for you. It's pretty simple. And then, if the RSI crosses below a certain threshold and the close is above a moving average, then you buy. You do the exact opposite for selling short. Again, it's a symmetric system. This is something I teach in my class that I think is a good thing to do. And it's a stop and reverse system where you're either long or short all the time in the market. You may like that, you may not, but that's what I tested here. Here's the Tradestation Code. Again, it's pretty simple. You should be able to read it even if you're not a TradeStation person, which is kind of cool. They use what they call easy language. Works really well, does most of what you want, and it's pretty simple. So you can see I have one input, or three inputs, I should say, one input line, and then two lines for the actual strategy. One line for buying, one line for selling short. Looking at optimizing and iterations, that's always an important part of running walk forward testing and figuring out robustness of a strategy. You see I have three different input variables I'm optimizing, and I have 36 iterations total. Okay, so some of you might say, well, wow, you only have three inputs and 36 iterations. That's not that much. Why don't you do more? Well, the simple fact is optimization can be really bad. And in fact, the way most traders do it and the way most trading software teaches you to do it encourages a lot of bad habits. I've seen people with 40 or 50 variables that they're optimizing. Like, oh my goodness, that's so curve fitted. And a lot of people will do millions of iterations. I always see on trading forums, people will say, hey, my back test is going to take a week to run, or it's going to take 3 days to run. What kind of computer should I buy to make it faster? And I comment a lot of times and say, it's not about buying a faster computer. It's about making a simpler strategy. And, usually people get kind of mad at that. They don't like to hear that because now I'm questioning what they're doing when they just wanted a faster computer. Well, if you run millions of iterations and you have tons of variables that you're optimizing, you're going to get performance that I'm going to show you in a second, where you get a nice looking equity curve during development. That's on the left side. So you do all the optimizing and everything else, you get that curve. But then you turn it loose for live performance, and a lot of times this is what happens to that strategy. It just falls apart. It loses money. It doesn't continue that equity curve. And it's because you're either curve fit and or over optimized. People use those terms interchangeably. It means the same thing. you're doing too much to a strategy. You're getting too good of a back test, and you got to watch out. So if you're going to optimize, do it intelligently. Don't overdo it. Okay, so let's look at some preliminary test results. These are different markets, different bar sizes where this strategy has worked the past 2 years. It's based on a robustness test that I teach in my class, but basically it says, hey, this is a pretty good strategy for 2 years. Now, of course, that's not the final test. You still have to do other testing, such as walk forward testing, but this is a good start. It says, hey, maybe the strategy has something to it. Altogether, there were 25 different combinations of markets and bar sizes that would work. So you can do those and then go to walk forward testing. Here's a few walk forward results. Now, this isn't the best result in the world. I definitely have some concerns about it, but it makes a lot of money over a long period of time, and you can't discount that. It does have some significant drawdowns, though, so that's what you got to kind of watch out for. This is BRN, which is Brent crude oil. You might say, well, what's that? This is traded on the ICE exchange. It's not your typical CME crude oil. CL is the symbol for that. This is BRN. And a lot of times, crude oil and Brent crude oil, they'll act similarly. You know, they are correlated, but I do find systems that work good with one market and not the other. This is one case. 725-minute bars here. This is all out of sample. Here's one for soybeans. This is 245-minute. Again, not exactly the greatest of equity curves, but this is out of sample performance. So it tends to work better going forward than an optimized or an over-optimized system. So those are walk forward results. Again, that's just the start. There's other steps in the process that I use to say this is a good strategy. And most strategies, most things you test end up falling out with the criteria I use. But what you're left with are the best of the best, some of the strategies that are likely to perform going forward. Since it works on different markets, different bar sizes, and with different values of the parameters that we use, you can say that this is a pretty robust strategy idea, and it has a lot of potential to it. But again, hey, this is what I tested. You'd want to verify anything you test yourself. Make sure that it works for you. Because if you want confidence in what you're trading, you're going to want to test it yourself and verify these things for yourself. Well, if you like this video, please subscribe to my channel. Give it a thumbs up. That way I'll keep making more videos. And don't forget, leave a comment. Thanks for watching. I'm Champion Trader Kevin Davey. Have a great day.